So first, we can go through the number in the fiscal report. So we have 3% of GDP, the budget deficit. We have 1 trillion special central government bond and the 3.9 trillion special local government bond. So if you take a face value, they are very similar as we saw last year. But remember, there's a 500 billion carryover from last year. So that has changed the fiscal policy stance. Actually, our interpretation is the fiscal policy is more growth-friendly compared to last year. Last year was a year of the fiscal contraction, and this contractionary fiscal policy stance was taken away to become more neutral or growth-friendly. So I do see this improvement. Now, second point is that some investors actually argue this is not sufficient. I want to make additional point that there's also coordination from the monetary policy, particularly the PBOC issued the PSL. These are quasi-fiscal operation, and that's important behind our growth forecast, supporting on the public housing, the urban village renovation, and that can lift the GDP by roughly half percentage point in our forecast. Now, the third point, probably most important, is that why the government keep on seems to be falling behind the curve as the investor has been hoping for. I think here several reasons. One is that the narratives on the current economic situation is different. The government seems to be much more benign where they are. They recognize the difficulties, but not as serious as the investor has been concerning about China's currency, like housing market problem, deflation problem. They recognize the issue, but not treat as a very serious issue. Second, I think China's own history, the 4 trillion stimulus package back 15 years ago, they internally still recognize actually there's it's good in the near term, but actually generate a lot of side effect in the longer term. That's why they have been very careful not say for another round of big stimulus package. Instead, they're choosing the gradual incremental policy approach. And finally, I would say the policy, the room for additional stimulus and also the policy transmission is also quite different. So that also affects the policy decision and linking to the discrepancy between the government and the market views.
Something else I noticed you mentioned in your notes was the scrapping of the Premier's press conference to wrap up the NPC. You and your team have said this is disappointing and not helpful to address market concerns that China's policy is becoming less transparent and less predictable. Talk to us about that in terms of how global investors should be looking at this.
Yes, so like I said earlier, the narratives on the current economic situation and also the interpretation about the right policy response, we see actually the big discrepancy from the market view versus the government view. So from that perspective, it is actually the right moment for the government to step up to further elaborate on their policy framework and the policy views. So from that perspective, I think it's disappointing that we see the cancellation of the press conference from the Premier. So hopefully that we can get more insight from this afternoon, the ministry level press conference, which is called they are in charge of specific jobs in their own territory. Yeah.
Haibin, unemployment is running just a little bit higher than 5%, right? Mm-hmm. Youth unemployment is much worse, about 4 times that, right? Which raises the question of, and this is always the question for China, right? Social stability. Mm-hmm. When I take a look at that 5% growth number, which I think all agree is challenging, right? Mm-hmm. And then I take a look at the 12 million jobs created, right? I'm thinking this doesn't add up because back in the day, we needed 8% growth in China to absorb 10 million new entrants into the workforce. Now we're growing at almost half that rate, but we're hoping to create 12 million jobs? How is that going to happen?
Yeah, I think that one is that the economic, the size is different, it's multiple times highest. So that's part of the reason why 8% in the past is not equivalent to 8% for the current moment. Probably, 4-5% is equivalent to 8% in the past. But having said that, I think that another reason, I think that 12 million, this concept may be evolving over time. I remember, say, a long time ago when we talk about annual 11 million job increase or 8 million, we talk about net increase, the increase in the total employment. In recent years, actually, seemingly we're talking about no longer talk about the net increase. We're talking about the gross. Okay. So the creation of new jobs. So that is not adjusted by the people departing, leaving the labor market.
Okay. Does deflation get worse? And to what degree, Haibin, did the leadership address not only deflation, debt, demographics, and de-risking?
Yeah, deflation is a serious risk. Actually, it's a reality. Actually, if you look at data in the fourth quarter, we have a CPI, PPI, and also GDP deflator all in the negative territory, right? So the deflation risk is real. I think that from policy perspective, we keep on arguing that the government should shift the policy focus to provide more support on the household consumption, on the domestic demand, instead of, say, keep on pumping the support to the investment and production side. That's part of the policy reason behind the deflation pressure in China. If we look at the work report, they do recognize the difficulty of the weak domestic demand, and they also talk about the measures to support the domestic consumption. For example, the trade-in strategy for the home appliance, for the electricity car, and they talk about supporting the child care and the elderly care. So that I think that's positive. But if you compare the policy, the priority, it seems that they still prioritize in the production investment. So I think that from that perspective, the low inflation environment will continue to stay. We believe that deflation will end for this year, but not because actually the demand-supply imbalance being fixed. It's more because the global commodity price is turning around. Domestically, the pork price is turning around. So these are kind of the unusual factors ending the deflation. But low inflation environment will continue to stay. Having said that, I will say that the government seems to take a very benign view. So one implicit number from the government work report, from the fiscal budget report, is that the implied nominal GDP growth is 7.4%. So if you're linking with 5% real GDP growth target, that means that the government implicitly assume 2.4% GDP deflator, which is mission impossible. Right? Let me put it away. So because last year the GDP deflator was negative. So you have to assume a very strong reflationary process for this year, which I don't think is going to happen. Okay. Yeah.
Haibin, another thing that stuck out to me in that work report was intensifying efforts to attract foreign investment and more particularly actually lifting some of those restrictions in the manufacturing sector. Do you think that some of the announcements yesterday, the pledges, went far enough to try to convince foreign investors to continue to park their money in China? Because we've heard this from Premier Li Qiang before, and the numbers are telling a very different story when you look at those foreign direct inflows.
Yes, so the announcement is not new, removing all these entry hurdle for the manufacturing sector. But I think it's more positive. Yesterday, they also mentioned in some service sectors, say telecommunication, also relaxed the entry restriction. So I think this is a positive. Last year, yeah, of course, from FDI side, actually the data actually declined quite sharply. Actually, it's the lowest FDI inflow in the last 20, 30 years. So from that perspective, there's a strong policy intention to stabilize or bring back actually the FDI. So I think there's among the 10 tasks, actually, there's one session particularly talking about how to attract the FDI, talking about national treatment for foreign companies, and also how to make doing business easier, including like travel, right, easier in China. So I think these are the positive statements. Again, that implementation is the most important. I think that investors, the general attitude is that, yeah, it's fine. Actually, we're happy to see actually this good policy, the statement in the right direction. But more importantly, actually, we want them to be reflecting the policy actions.